The topic that I'm going to discuss this time is all about information technology audit, or also known as the IT audit. However, what really is this aspect? Basically, the inspection and evaluation of an organization's information technology infrastructure, policies, and operations is known as an IT audit. Wherein, to be more specific, IT audits verify whether the IT controls protect such corporate assets, preserve data integrity, and are in line with the company's overall objectives. That is why the respective IT auditors look into the controls involving the information technology systems, which include not only the physical security, but as well as both general business and financial controls. Moreover, it can also be defined as any audit that examines and evaluates the automated information processing systems, non-automated processes, and the interfaces between them. In addition, since, as we all know, because of the operations in modern firms, which are becoming increasingly computerized, IT audits are used to check that both information-related controls and processes are working efficiently at the same time effectively. That is why it also has some specific objectives. And here are the following 5 major goals of an IT audit. First, to examine the systems and procedures in place to protect the firm information. Second, to determine the risks to a company's information assets and assist in the development of mitigation strategies. Third, to provide evidence that internal controls exist and are operating as intended in order to reduce the business risk. Fourth, to ensure that information management processes adhere to IT-specific laws, policies, and guidelines. Fifth, to determine inefficiencies in IT systems and the administration of those systems. Furthermore, an IT audit also has 5 basic components, which are the following. First is the systematic process, in which an audit is a logical and methodical process that applies to all types of information systems. While a methodical approach is vital in all audit environments, it's more important in IT contexts. The absence of physical procedures that can be visually inspected and evaluated adds to the IT audit's complexity. As a result, a logical framework for performing an IT audit is crucial to assisting the auditor in identifying all critical procedures and data files. Second is the management assertions and audit objectives. The financial statements of an organization reflect a collection of management assertions regarding the entity's financial health. The auditor's job is to examine if the financial accounts are presented fairly. To do so, the auditor sets audit objectives, creates procedures, and collects information that supports or refutes the management's claim. Third is obtaining evidence. As we all know, auditors are looking for evidence to back up the management claims. This process in the IT world entails obtaining evidence about the reliability of computer controls as well as the contents of databases that have been processed by computer programs. Evidence is gathered through control tests that verify whether internal controls are operating effectively, as well as substantive tests that determine whether accounting databases accurately reflect the organization's transactions and account balances. Fourth is ascertaining materiality, in which internal control flaws and misstatements in transactions and account balances must be evaluated to see if they are substantial. Assessing materiality is an auditor judgment in all audit situations. However, in an IT context, technology and a complex internal control system complicate this issue even further. Last is communicating results, wherein we are all aware that the auditors must share the results of their testing with anyone who is interested. Independent auditor submits a report to the board of directors, audit committee, or company stockholders. The audit report includes an audit opinion among other things. This view is being shared with interested parties, both inside and outside the business, along with the financial report. Internal and external auditors are frequently informed of IT audit results, which are subsequently integrated with non-IT components of the audit.